Hi, Todd VanDenburg here with VanDenburg Capital Management and another Uncommon Sense update. So, third quarter is over, but the fourth quarter has started off like a rocket. I mean, I've had several conversations with people. The first 2 days of trading days of October were the best two back-to-back trading days in over 2 years. It was a great start to the month, but we don't want to get too excited about it. I mean, the reality is that September was really bad. 2022 has been bad. And so, we don't want to get lured into this, hey, 2 good days means that, we're beyond any market troubles and it's time to, start being aggressive. If anything, it's really time that we be more cautious. We really don't know what's going to be happening here in the next couple of months and for the balance of the year. We do know we have an election coming up in 5 or 6 weeks, and that the results of that election are going to have an impact on different people's perceptions of what the economic growth outlook might look for 2023. So we're going to be like sort of biding our time until the election results in order or before we start making any additional changes. As I mentioned in a prior update, we have been making some changes to try to take a little bit of the risk away from our client portfolios. We're certainly not going conservative by any stretch of the imagination, but we are, just in recognition of the fact that, it's pretty volatile times and we don't really know where things are going. We don't know how much farther the Fed is going to go in raising interest rates. We don't know what the federal government's going to do as far as borrowing more money and potentially making inflation worse. So, money that we had in the market, we're transitioning to money that's still in the market, but putting some protection devices in place to try to limit our potential downside. We've also increased cash too, but I talk about that all the time. Now, before I go on any further, any of you that are watching this and not just listening are probably going, what happened to his eye? Yes, that's not a bad lighting. I do have a black eye. I do Brazilian Jiu-Jitsu as a way to stay in shape. It's not the brightest thing that an almost 60-year-old guy could do, but I enjoy it a lot. And so I took an elbow to the eye and I'm fine. I was going to joke about how I'm really fighting for my clients and in the markets, but no, it's just me, rolling around on a mat with some 20-something-year-old white belt who got a little too aggressive and threw his elbow into my face, and I caught it pretty good. So in any case, back to the update. OPEC just announced that they're going to be cutting production of all things, right? Cutting production. That's just what we need in a highly inflationary environment, is to reduce the supply of a highly in-demand commodity. But that's what they're doing. And anybody who follows this would know that they're doing it because they know that demand is still relatively high. And when demand is high, you try to make something more scarce so that you can make more money. And that's really what OPEC has always been about. It's about how can they make more money. And they see this as an opportunity to make more money. President Biden, when he met with them and talked with them, tried to talk him out of it, and that was to no effect. So President Biden just announced today that they're going to be releasing 10 million barrels of oil from the Strategic Petroleum Reserve in an attempt to try to, at least in the United States, offset that reduction in production. But the reality is 10 million barrels in the grand scheme of things is a drop in the bucket. Today, the U.S. produces about a million barrels a day, less than it did, before the Biden administration took office. And it's just the reality is the Biden administration has some different objectives regarding energy, and fossil fuels is not high on their priority. So it's not a surprise that we're not producing as much oil. But that does sort of add to the problem of gas prices continuing to be high. They have been coming down in the last couple months, but as OPEC gives us a squeeze here, we should expect to see gas prices at the pump come back up a little bit. Gas and oil futures have already started to rise. So anyway, be prepared for that. It's coming. Um, the only other thing that I wanted to talk about, again, to go back to my initial point, is just because the markets have been up the first couple days of October, they were down slightly today. Really, this is not the time to get greedy or to get overly fearful. So if you have money in the market, take a good look at what you own and ask yourself, would I buy what I own at the current price? And if you wouldn't, then maybe it's time to switch it out for something that you would own. So do basically a swap, right? You sell one thing. Let's say you have $10,000 of one investment, an equity investment. You sell that $10,000 and you buy $10,000 of another equity investment on the same day, so that you're not out of the market. You're not out of equities. You're not leaving yourself exposed to some sort of a swing in volatility while you're trying to make these trades. But just be more conscious of, am I owning the things that I want to own? Because we're down roughly 20% from our highs, and this is an opportunity, if history repeats itself, that the fourth quarter could be a decent quarter, and the first half of next year historically are typically good when you look at them in terms of the last quarter before a midterm and the first and second quarters after a midterm. Typically the markets do okay. So we don't know that that's going to be the case, but as long as you have plenty of cash and an emergency fund, if you're young and you're contributing to a 401k, just smile every time you get a paycheck, because you're buying at a discount. 20, 30, 40 years from now, when you look at this money, you're going to forget that this stuff ever happened. So don't be overly pessimistic. Don't be overly optimistic. Look at your portfolios. Make sure that you're owning the things that you want to own, and position yourself well for any potential upside. If something changes and I get more fearful, trust me, I will let you know. I've been hearing it quite a lot the last month or so, as I got just the slightest bit less optimistic. A lot of people read that as I was maybe pessimistic, and as I said before, I'm not. I'm just less optimistic. But I could become, less optimistic and maybe closer to pessimistic if the federal government and the Federal Reserve continue to do these things that so obviously are going to hurt the U.S. economy. One last note on that. I don't think that anybody in government, Federal Reserve or federal government, are doing the things that they're doing because they want to hurt the U.S. economy. Sometimes people, just do things with the best of intentions, but they cause some, side effects that maybe they didn't anticipate, or maybe ignored because of other benefits that they think are more important. So in general, as I've said this to many people here lately, I generally think most people that we know and most people in politics do what they do with the best of intentions, but they're not always right. And when they're not right, bad things happen. And in this case, I think what the Federal Reserve is doing is intentionally harming the U.S. economy. And if they keep doing it, they could make it worse. And so we're watching that pretty closely, and we think you should too. So if anybody has any questions about this, my eye, Brazilian Jiu-Jitsu, the markets, the economy, whatever, post a question to this update, send me an email, give me a call, send me a text message. I'm happy to respond to any inquiry you might have. That was your update. I hope you enjoyed it. If you did, give us a like, give us a share, and I'll be back again soon with another black eye and another update. Thanks for watching.
If you'd like to be the first to hear of more uncommon sense updates like these, please click the subscribe button below. We'd really appreciate it. Thanks again.